Trading emotionally without clear limits on position size or the number of entries, without any consistency grounded in proper risk management, eventually leads us into uncontrolled overtrading. Once losses begin, we start adding more and more positions impulsively, and the ability to stay in control slowly disappears. Some market moves make profit feel deceptively easy. Certain trades reach take profit quickly, and those experiences create lingering expectations that follow us into future trades. If one large position generates profit, the next time we want to enter even bigger, add more positions, and push harder. One of the most dangerous things about trading without a structured plan is that as long as we are winning, everything feels manageable. We convince ourselves that we are still trading responsibly, still following some kind of discipline, still in control. But after a long series of wins, overconfidence inevitably begins to build, and eventually there comes a moment when we become emotionally overstimulated, either from excitement, euphoria, or from watching an aggressive candle explode across the chart. And in those moments, we suddenly begin forcing significantly more trades into the market. Then that trade loses, but because we have become psychologically attached to winning, and because there was never a real plan to begin with, we do not stop. We immediately try to recover the loss, and once we are already down money, simply recovering the loss no longer feels enough. We want to recover everything and still make additional profit. So we begin doubling or tripling our exposure, desperately hoping to recover quickly, telling ourselves that if we can just make back the loss and earn a little extra profit, then we will stop. Even if the market gives us the opportunity to recover, it becomes psychologically difficult to walk away. The emotional pressure from the previous loss creates mental instability and an overwhelming need to win back enough to emotionally compensate for the frustration and emotional collapse from before. And the outcome is almost always the same. The account eventually gets wiped out. The market constantly creates price movements that allow us to make profits quickly, making trading feel deceptively easy. 10 easy wins make us excited, confident, and emotionally attached to the feeling of fast success. But then, the moment the market suddenly becomes difficult, we begin reversing positions repeatedly, chasing trades emotionally, and in a single day, we can lose not only the profits we made, but everything in the account. In many ways, trading becomes a psychological trap. The market conditions traders through periods of easy profits and short-term victories, slowly lulling us into comfort. We become less disciplined, less cautious, and eventually forget the very plans and rules that were supposed to protect us. And once that happens, the market takes back everything. The reason I often lose everything in a single losing day after many profitable days is simple. I either have no real plan, or I fail to follow the one I already have. Some days, one winning trade leads to 3 or 4 more easy wins. Other days begin with 1 or 2 losing trades, but after aggressively trying to recover, not only do we recover the losses, we end up making even more profit, which only encourages us to continue trading. And then eventually, another losing trade comes. And by that point, we have already been psychologically conditioned to keep entering trades, keep chasing candles, and keep forcing positions until the account is finally destroyed. What makes this so dangerous is that it slowly trains us into an aggressive style of trading with no real defense. Trading without structure, without limits, and without discipline. Our emotions begin moving with every candle. Entering trades becomes automatic, impulsive, and emotionally satisfying in the moment. And over time, whether we win or lose, we continue strengthening the exact same undisciplined behaviors, reacting emotionally to price movement and trading purely based on the movement of candles themselves. And in the end, all of it comes back to one simple truth. We are trading without a real plan, or we are unable to consistently follow the plan we already have. This is exactly what the market wants, because it keeps traders trading without ever knowing when to stop. Trading without limits, trading without a clear ending point, regardless of whether they are winning or losing. At that stage, the only thing capable of stopping the cycle is complete destruction, the moment the account is finally terminated or blown. When that moment arrives, regret inevitably follows. Thoughts like, just a little more, I should have done things differently, or, if only I had stopped earlier, begin flooding the mind. But by then, it is already far too late. That is why we have to stay aware and stop doing exactly what the market conditions us to do. We have to learn to do the opposite. Discipline feels painfully boring at first. It makes us feel as though we are missing easy opportunities and slowing down our journey toward making money. But the truth is, the way we have been trading has never actually made us richer faster. If anything, it has only pushed us further backward, keeping us trapped in losses, repeated account blowups, and constant financial decline. Escaping these psychological traps is difficult. In the beginning, it feels frustrating, restrictive, and emotionally uncomfortable. But at the very least, the result is no longer endless account destruction. And personally, I believe that if we stop repeating the same behaviors that continuously make us lose, then doing the opposite naturally gives us a far greater chance of eventually succeeding. It is not easy. But if we can stay aware enough to truly follow through with it, success becomes possible.